My name is Leah White, and I'm a partner with Doane Thornton's Risk Services practice, and I'm here today with my colleague Lindsay Gallivan, as well as Giovanna DeSoro from DLA Piper LLP. And we've been working with a lot of different organizations with regard to Canada's new Modern Slavery Act, which came into effect January 1st of this year. It is probably Canada's best kept legislative secret because a lot of organizations had no idea it even applied to them, and a lot still don't know the implications of that legislation when it comes to their business and their reporting objectives. We learned a lot in year one, and there are some myths that have popped up that we would like to take the time in this video to dispel and provide you with some more information about what exactly this legislation means to you and your business, what it means to report under Canada's Modern Slavery Act, and what this looks like perhaps for you going forward into the next reporting cycle due May 31st of 2025.
One myth we regularly hear as it relates to modern slavery is that it doesn't happen in my workplace, company, or in Canada, so I don't need to report. Another thing we regularly hear is that there's no risk in my industry or sector. These are all, in fact, not true. No country or geographic region is immune from the modern slavery risk. In fact, you don't have to look very far to find local examples. Similarly, no industry or sectors are exempt from modern slavery. While there's certainly a higher prevalence in some industries or sectors, no one is immune from it. And when we think about modern slavery, it isn't just your company, it's your supply chain. So we need to think about other items than just your finished goods. We think about packaging and all the raw materials. What is included in your supply chain as a whole?
Another myth that we've heard is, I don't really have any risk because I only buy from US or Canadian businesses. And it's true that that may help to limit your risk to some degree, but that doesn't mean that the suppliers you're buying from aren't buying from higher risk suppliers themselves, because you are responsible in your reporting not just for who you are buying directly from, but who they're buying from and who they're buying from, all the way back to the raw materials stage. It's important for you to understand your entire supply chain. So you need to spend some time in your risk assessment process developing an understanding of that and the higher risk areas, all the way back to who your suppliers may be purchasing from.
Another myth that we heard quite often is that because the rules aren't being enforced, then your business may not need to comply right away. Again, that is a myth. We believe that is false. Why is that not true? It is not true because 2024 is the first compliance year. You would expect in the first compliance year to have the regulator take more of a transparency-based or informational-based approach rather than a strict enforcement type approach, which is what we have seen. This year, the regulator has not laid any charges against any entities, directors or officers, at least that we know of. However, it is not safe to assume the regulator will take the same approach in subsequent years. There are a number of factors you may want to consider when deciding whether to comply and comply now if you were required to do so and you haven't done so. One of those factors is going to be the regulator's approach. It is reasonable to think that the regulator is going to step up enforcement if compliance was low this year. Based on information that the regulator has released, as of May 31st, 2024, only about 6,000 entities filed reports. Of those, about 145 were government entities. Those numbers are fairly low. If compliance was low in the first enforcement year, chances are enforcement is going to be stepping up as opposed to staying the same. Another factor you may want to consider is comparing the potential liabilities under the legislation to the time and expense that you may incur in preparing, posting, and filing a report. Frankly, when you make a comparison, the time and expense of preparing, filing, and posting a report is very minimal. Another factor that you may also want to consider is reputational. If there is a step up in the enforcement efforts by the regulators, it is likely that you're going to have to be dealing not only with the legal consequences of that enforcement, but also with reputational consequences. And finally, if you are a publicly listed company, for example, if you're listed on a Canadian stock exchange, you were required to comply and you haven't complied with the legislation yet, you may be an easy picking for the regulator. That might be another factor for you to consider. In summary, even if enforcement this year was not particularly strong, it is not safe for you to assume that your business doesn't have to comply right away if it is otherwise required to comply with the modern slavery legislation.
We've also heard the myth, I'm not a Canadian business, so I don't need to report. It is Canadian legislation, but it actually does have a global reach. Because as long as you have a place of business in Canada, have assets in Canada, or do business in Canada, which isn't necessarily fully explained in the legislation, then you can be captured by this as well. And one area we've seen this is, for example, if you're a US parent company and you have a Canadian subsidiary, you may also be required to report under this legislation.
Thanks for joining us today to work through these common misconceptions around the Modern Slavery Act. We hope that you don't let these common misconceptions make your company non-compliant. We are here to help you take action. We're here to help you educate your staff and, most importantly, protect your business. For more information on these rules and whether they apply to you, please visit our website or don't hesitate to reach out to your trusted advisor. Don't wait for enforcement to catch up with you. Start preparing now.